We're pleased to say we're joined by Felix Hufeld. He's been the BaFin president since 2015 and is also a member of the Supervisory Board of the Single Supervisory Mechanism. Mr. Hufeld, delighted to have you with us. Thank you so much for joining us. So let me ask you first about Brexit and the prospect of a no-deal scenario. In terms of what you've seen from banks planning, are they preparing for a no-deal Brexit?
Absolutely. All the major banks, all the major institutions across the world, let it be US firms, UK firms, or Japanese firms, or from any other country, are really investing enormous resources. Of course, the full picture across the whole of the industry is slightly more diverse. More medium-sized and smaller institutions are lagging behind, but the really crucial institutions are investing heavily time and money to get prepared.
Could there be any winners from Brexit in the banking sector, Mr. Hufeld?
Well, every bank knows that if they don't have significant operations established in EU27 post-Brexit, they will have difficulties to continue business in the EU. So they will have to relocate certain types of businesses to remain in the business. And that's exactly at the center of all actions being discussed with us as regulators and supervisors.
One of the big questions as well is around contract continuity. Should there be a guarantee of contract continuity? That
indeed is one of the major challenges we have around. In my view, it is almost impossible to fix that problem exclusively just by one side of the stakeholders involved, let it be the industry itself or individual supervisors. I'd rather prefer a regulatory or legislative solution to fix the problem. We have billions and billions worth of derivative contracts in question, insurance contracts, and indeed to offer the necessary degree of security going forward. There should be a solution on a political level.
Mr. Hufeld, wonderful to have you with us today. I want to go back to the word of the moment. I'm sorry, my German fails me. I've got to get to the Babel and get my German better. But the word is scale. Everyone wants scale. The leadership of Deutsche Bank in full-scale panic, they want scale. Jamie Dimon wants scale. Everybody wants scale. Define Germanic European scale.
Well, that's good to hear. So why don't they do it?
Well, why don't they do it? What are the banks going to do? The pressure to build up, how is that going to unfold in your Germany and across continental Europe? Are we going to see mergers? Are we going to see massive cost cutting and consolidation? How do you get to scale that's not Anglo-American?
Well, first of all, let me just point out a simple fact which tends to be overlooked. Consolidation and creating scale is a fact of life in my country, in Germany, every single year. Anything between 25 and 40 to 50 banks are going out of business by means of mergers, year by year by year. So we have a very heavily consolidating industry. Of course, you are talking about major institutions to create what's commonly called national or European champions and creating scale in that environment. Yes, I'm sure it will happen, but currently we shouldn't underestimate the complexities of cross-border consolidation, which are massive. And I think post-crisis there's still quite a bit of homework to be done. That includes major German institutions, but it does include other European institutions as well. So the market will sort it out, and we, of course, as supervisors, will stay very close by.
Well said, very nicely said. Within that and within the supervision is the sense of regulation across continental Europe. Is it every nation and every regulator for themselves, or can there be a consolidated and united regulation within your Europe?
Well, absolutely. On a regulatory, meaning legislative level, most of the financial and banking regulation, the same would be true for securities and insurance, now is European law. So the degree of fragmentation has dramatically decreased, which of course is a very good thing. Operational supervision, as you know, since the end of 2014 has been moved up to the ECB, which, as mentioned before, I'm proud to be a member of the Supervisory Board. So even the actual application of regulation by means of supervision has elevated to a European level, which indeed will promote a more unified European marketplace. But let's not underestimate the complexities going along with it. What has been achieved within 4 years is massive, but the next 10 years will be quite interesting as well.
Well, to that point, Mr. Hufeld, and on the point of the single supervisory mechanism, we're, of course, expecting some big personnel changes. How is the focus of the SSM going to change? Could we see an easier ride for banks?
No, most certainly not. And frankly, I don't think that there will be a big shift just triggered by a change in the role of the chair. Indeed, as of January 1st, we will have a new chair. But the challenges and the agenda is well carved out by the Supervisory Board. We have a very clear strategy how to move on, and the focus issues like reducing risk, reducing non-performing loans in particular, will remain very high on the agenda. So the an easier go for the industry going forward? The answer is no, forget it.
You've said before, Mr. Hufeld, that you've been concerned by any contagion from Italy. In terms of Turkey, big theme, emerging markets for us this week, as in many previous weeks. Should the ECB order banks in Europe with Turkish exposures to hold more capital?
Well, we are closely engaging with those banks having the highest exposures to Turkish risk. We are talking to them on a continuous basis. We haven't made up our mind what the exact reaction should be. Short term, I would doubt that increasing capital requirements would be the right answer. But we are very closely watching the situation, and we will sort out measures in a close dialogue with those institutions most concerned. It's too early to tell whether capital increases would be the right measure, or possibly even sharpening or escalating the situation.
Mr. Hufeld, thank you so much. BaFin President Felix Hufeld today from Frankfurt.